Hey guys, Tara Ryan here, and today's tip from Tara is to share with you a couple of lending guidelines and frankly how bizarre they are. One, so you can learn from them, but two, so I can tell you how in general it impacts you and your clients. So in lending, let's first talk about gift funds and then we'll talk about cosigners. Gift funds on a conventional loan have to be from family. Family is defined very clearly as somebody related by blood or marriage. Okay, they do add in their fiance, but it does not include an ex-husband, for example, no longer related by marriage. It doesn't include a boyfriend or a girlfriend, not related by marriage. Sometimes we've got to get that boyfriend to be fiance in order to use the gift funds, okay? So it's very, very strict. FHA, on the other hand, very generous on gift funds. A cousin qualifies. They're wide open on the number of family members, but also they include family friend or someone with a long-term interest in your buyer's well-being. So that could be a boyfriend, a girlfriend, an ex-spouse, all kinds of people. It could literally just be somebody they've known for a long time. So gift funds, conventional, very tight. FHA, pretty wide open. Now let's contrast that with cosigners. On a FHA loan, the person co-signing on the loan must be family. They can be related again by blood or marriage, but as we talked about, an ex-spouse would not qualify for an FHA cosigner. Conventional loan, who can be a cosigner? Any Joe Blow off the street. There's absolutely no requirement. It could be literally anyone. Who's willing to co-sign on the loan. So think about that. It's backwards, right? Whereas conventional is really tight on who can give the gift funds. They don't care who's co-signing on the loan. And FHA is exactly the opposite, where the co-signer is really tight, but they're a good bit wide open on gift funds. Why am I sharing this with you? Well, you might have a deal that you're working on where you're wondering, gosh, why am I running into these requirements from the lender? But also to point out how our guidelines don't always make sense. I can't always explain all of them, right? There are times when we're like, the rules are the rules, right? I don't know why one is tighter than the other and why there's not consistency there, but I do know this. It's super complicated. There's a lot of variables. Even on the conventional, there can be differences between Fannie Mae and Freddie Mac, and we have to get into those details as well. So I tell you that to say, make sure you're working with a pro. Make sure you're working with people who have the experience and the knowledge to help your clients through the maze of guidelines that frankly don't always make sense. So I always say, hey, I can't always explain all of them. I can't justify all of them. Some of them are just the way they are. But I thought this was a useful juxtaposition of how some of them are wide open and some can be super tight. And you need to work with a pro to make sure your clients have a great outcome. As always, we are here to help. Please give us a call.